Welcome to Wall Street Niger FVG. I go by the name of Mashola Bemigo Ofuya, the macro translator, as you already know. You're welcome to another Forex market analysis and market breakdown. Oil prices are still low. The market is pricing a deal between the US and Iran. That's also tying into the theme for this week because it seems like the risk takers are in the market. Regardless, I think it's still a more cautious approach. So US labor market data. Tuesday we had job openings, and then Wednesday we had the ADP non-farm employment change. Job opening declined slightly than market forecast for July. Showed that not much change to the jobs that were available in the previous month. And then the ADP non-farm employment change that came in on Wednesday yesterday revealed that 44,000 jobs were created, less than market expectation. I think both data reveal a slowing in employment. But also there was a little bit of surprise that wages increased in the month of July compared to the previous months. That could feed into the average hourly earnings that's coming out on Friday. And then the job openings and the ADP could also feed into the NFP coming out on Friday as well. It could mean that the total job creation in the US slowed in the month of July. So I'm not expecting NFP to surpass or be in line with market forecast. I think slightly lower, maybe within the 65 or 70K region for the NFP. The unemployment rate is going to be tricky because we have unemployment claims coming out today, which could give us an insight to unemployment rates. But I think unemployment rates in total could stay within 4.3. So we may not get unemployment rate ticking crazily higher. The US labor market pretty much proved to be resilient and showed some strong runs from H1, showing strong numbers in employment growth and also unemployment rates pretty much holding steady and ticking slightly above. What does this mean for the US dollar? What does this mean for the markets? I think markets may likely stop pricing in for the rate hike from the Federal Reserve, considering the fact that headline inflation may likely start cooling the moment a deal becomes finalized between US and Iran. And also, I think we may see commodities rise if markets are no longer perceiving or pricing in for the rate hike from the Federal Reserve. We're walking away with a risk on market should the Straits of Hormuz stay open. Also, we're seeing a decline in employment. We're seeing a natural decline in employment for the month of July. It's going to be interesting to see how August and September hold. And then thirdly, markets may start pricing a rate hike, considering the fact that headline inflation appears to be on a path towards cooling. Yeah, I wish you a wonderful day and cheers.